Hi, and welcome to another daily recap. So, today I'm going to recap uh, December 3, 2024. So, today there was only one news at 3 p.m. So, this is out of my trading session. So, that will not bother my technicals. So, jumping into the charts from the daily perspective in the euro dollar, the swing structure is bearish and internal is bearish, and the price at chalked bearish here. So, let me zoom in for more details. So here you can clearly see the price took the buy side liquidity and chalked bearish, but it also took the sell side liquidity. The thing here is the supply is still holding and the price can push further up to mitigate into this supply, and it can push down to take out some more sell side liquidities. So from the bullish perspective, I'm also having another concern is that price had mitigated into this demand with a strong rejection. So this is a rejection. These kind of rejection happens only if there is a ton of demand stepping into the market. So we can clearly see a strong rejection, but it did not follow up with a strong bullish momentum. You can see there were a lot of pullbacks here. So this has built up some kind of low resistance liquidity. So price can just rally down and take out the weak internal low. So that could be the possible case. So that's why I just want to take out the bearish moment. I mean the bearish bias, because the price had chalked bearish with momentum, and also took out the buy side liquidity, and there is a strong supply which can hold and push the price up. So this could be my strong fractal high, and also the internal structure is still bearish. So this high is not yet taken, and this is a strong high with a sweep of liquidity. So I'm just expecting the price to push further down. So jumping into the 4-hour chart, the swing structure is bearish and internal is also bearish. So price has mitigated into the 4-hour demand, but this demand was already being mitigated. So there are multiple mitigations in this demand. So what can you expect? This demand could fail, and the sell side liquidity below this demand could be taken out. But there is a slight, possibility that the price could push up today, and probably the bearish reaction can be tomorrow, because there is some buy side liquidity, and with this consolidation I can expect the price to push up, take out this buy side liquidity, and then push down. So which is a kind of power of 3 setup. But that was my expectation, but the real actual bias would be bearish because of that buy side liquidity sweep, because of the high boss bearish, because of the price had mitigated multiple mitigations into this demand zone. So today this demand could be flipped, and then price can continue this bearish momentum throughout this week using this flip zone and the consecutive supplies. And also there is a lot of low resistance liquidity below. So considering all this, I can say that I can look for shorts taking if the price takes out the flips this demand. But I can anticipate this flip even further, even before it happens, with the help of H1. Suppose if I see some bearish sweep zones form during the session, then I can look for shorts expecting the price to take out the demand zone. So this is H1. The swing structure is bearish and internal is also bearish. So let's zoom in for further details and to identify the current price action. So immediately what I spotted was this low failed to take out this high, and this is a fractal high and failed to take out this high and just liquidated it, and even it chalked bearish. So this is a weak low, and today or probably if there is multiple consolidations, then probably tomorrow it can be taken out. But anyway, this low would be taken out, and this is also the 4-hour sell side liquidity. So the time frames are matching with each other, and this is a high probability day for me to take trades. So price having chalked bearish, I can look for some buy side liquidity sweep and then push down, indicating the bearish momentum into the market, and then look for shorts. The game plan is very simple, but the price had other ideas. It just rallied up and made a real bullish chalk. So which makes me to think whether the price wants to take out the 4-hour buy sell liquidity before pushing down. So that's what I expected. The price mitigated into this daily supply. So there is the buy sell liquidity above. If the price takes out the buy sell liquidity, then I'll be expecting the price to chalk bearish. If the price chalks bearish, then with this help of fresh POI, I can look for shorts. But following the internal order flow, I just wanted to look for shorts because of this 4-hour sell side liquidity. I know there is some buy side liquidity above. So because since I'm using M15 as my lower time frame, I can have sufficient space, and there the possibility of false signals would be less. Considering those factors, I try to take shorts, and moreover, this POI was very high probability for me to avoid trading. So this was 8 out of 8 POI. So that happens, once in a while. So I was tempted to take trades. So this is actually phase C, and the price is in the OT iron time frame is supporting the medium time frame idea, and this POI is very high probability. Why? Because it has swept liquidity, it has displacement, and it has made shift in the order flow. It has made an bearish IBOS, and it is unmitigated, and it has equal highs as inducement, and it is formed during the New York kill zone. It is stacked within the daily supply, and it has also flipped this demand zone. So there are multiple factors for which I can look for shorts. What are the other confluences? Asian I has been swept, supply chain is being respected, and there is a time-based liquidity target, that is the Asian lows, and there is also previous day low to be targeted, and there is this previous day low is also the weak internal low as well as the 4-hour sell side liquidity. So there are lot of factors to be considered. So I just neglected this one factor, that is in line with the medium time frame order flow. So the price is not in line with the medium time frame order flow. I am trading counterfractal but in line with the internal structure. So that one point gives me much because of that one risk factor, I must not avoid this much of positive confluences. If I do so, then I'll be psychologically having more bias with the fractal structure. So I'll never let that happen. Never let a single factor influence my trading decision. And yeah, there was a perfect LC2A, and if the price took out this pullback inducement, then I was interested in looking for shorts. But price did not take out that pullback inducement, rather it started to respect the supply chain and started to pull down. But in turn, in game 15, this started to make a low resistance liquidity on the upside. So what I can expect is price can rally up and take out all the buy sell liquidity, and then it can start to push down. So things like that can happen. And yes, it did happen. Yes, actually it did happen. So price took out the buy sell liquidity. And it started to rally down, and everything happened within a short span of time. But the thing here is, LC2A played out perfectly, and TP could have been hit if I had taken this trade, but unfortunately I was out of the screen and I was not able to capitalize on this move. So yeah, it sometimes it happens, sometimes it does not. So I cannot blame anyone except myself. I have to set the boundaries to become successful in this field. So yeah, it's because of personal reasons, but I can't blame my external situations. I need to set boundaries so that I don't miss the next chance like this. This is not an pure LC2A. Actually, the pullback inducement was right here. But considering all this has liquidity points, so price can take any of the buy sell liquidity and then rally down. So it's not just this buy sell liquidity. Price can take any buy sell liquidity. So yeah, it actually happened. Price took out this buy sell liquidity and even chalked bearish. But I left the session at this point, somewhere at this point, assuming that the price is going to respect the supply chain and then push down. That costed me 2.5 hour, and I was not able to capitalize on this trade. So moving on into GU, the swing structure in the GU in the daily time frame is bullish and the internal is bearish. The internal is also bullish. So let me zoom in for further details. The internal structure is bullish, but the price had made a sell side liquidity sweep, tapped into the daily demand. Price didn't tap into the daily demand, it just made a bearish chalk. So we can expect for further push down to take out this daily sell side liquidity, tap into this daily demand, and then push the price further up. So why I'm expecting this demand to be mitigated so intensely? Because this demand was formed via sweep of liquidity, and it also has an inducement right here. So which means that there is a lot of chance that this demand could be respected, and then probably in the lower time frames we can have some bullish chalk which can give us the confirmations for taking longs. So the bias was bearish. Why? I'm expecting the price to mitigate the demand zone. So demand flipped. So this is a demand that got flipped, and chalk bearish, sell side liquidity below, unmitigated demand below. So this is the key here. And if I zoom in to the 4-hour chart, you can see the 4-hour has made a bearish I-boss, and I can just continue to look for this. Continue following this internal bearish structure till the price mitigates into the daily demand zone. So zooming in, so there is a consolidation above, and you can see the price had made an internal chalk. So I can expect this buy sell liquidity to be taken today, and if the price takes out that buy sell liquidity, then I can easily look for bearish chalk in the H1, and then with the freshly formed POI I can look for shorts. So price did not mitigate this daily demand, so you can see that there is a small gap here. So I can expect the price to push down, take out this sell side liquidity below, and mitigate into this 4-hour demand and 4-hour / H1 demand. So the bias in the 4-hour is also bearish because supply is getting respected. You can see this supply is getting respected, which means also the price has mitigated into the supply, which means price will now move down to mitigate into this demand zone. So supply got respected, demand below, and there is also a sell side liquidity below. So zooming in into the H1 chart, the swing structure is bullish, internal is bearish, price has mitigated into the 4-hour supply, which means the phase D shorts. This is actually phase C shorts because price had made a bearish I-boss. So at 8:52, price had took out this buy side liquidity and almost mitigated into this H1 supply. So even if the price, now I can look for shorts because the fractal structure is still bearish. So this is actually phase C, and again the POI criteria, the POI is high probability, the phase C condition is strong, and this is not in line with the medium time frame order flow, but with a strong bearish bias and with lot of buy sell liquidity below, and with the high probability POI, and with lot of confluences for me to support, I can just neglect this a fractal structure confluence. Same price formed a fake break and a pullback inducement during the London itself. So I expected that that pullback inducement to be taken out, but it did not happen, and price started to flip this one, and there was a flip zone formed. So I expected price to take out this inducement at least, so that price can mitigate into this flip zone, and I can take trade using this flip zone using the mitigation candle, but that did not happen. the price just rallied down and nothing. The price did not give me a single chance. But when I was out of the session, yes, price did come up, took out this leg inducement and tapped into this flip zone, and it gave a perfect 2.5 hour. Actually, it was not a 2.5 hour because the mitigation candle was large. I mean, the liquidity candle was large, so I was not able to get the 2.5 hour. It was just 1.5 hour, but that was enough for me to bring my trades to break even. So could have been a break even trade. So thus anyway, it was neither a profit nor a loss in GU. But in EU, there was actually a trade which became a break even. So that's what more upsetting me. It is what it is. Like sometimes I need to learn from my own mistakes. So this I did not expect the price to rally up late in the New York session and then give me a trade, but it did happen. So from the next time, I need to set boundaries on my personal life so that I can utilize opportunities like this. So I think these kind of missed opportunities would be there till the daylight saving time structure ends in the western side. So once that is completed, again the time zone of the London would shift from UTC to UTC +1. So again, that would align with my work hours and my personal timing also. So yeah, that's it from my side today. So there was a perfect opportunity which I didn't get, but if you guys capture it, well and good. So yeah, see you guys tomorrow. Until then, cheers guys, bye.